Hello everybody, how's it going? So it is July the 21st, it's about 11 a.m. Central Standard Time here in Manitoba, Canada, and I'm going to give you guys an update. Just because I haven't been making any videos, it does not mean that I have not been trading. I've been trading behind the scenes, secretly and privately, just so I can have a little bit more focus. But I assure you guys with 100% certainty that I made a pretty good profit on this volatility, and I hope you guys had also a chance to capitalize on this amazing volatility. And I do have to admit that well, let's not deny it, guys, that July has probably been one of the best months to trade, June and July. And whether you came out ahead with profit or you came out with losses, at least you had some experience that you're now going to gain under your belt. And all that it comes down to it at the end of the day is gaining valuable experience. So what position am I in, guys? I'm in a short position right now for BSV. Of course, I'm going to be in a short position for BSV, guys. One of the biggest gainers at 77%, okay? That is a huge gain. Not only that, we can see the short-term drop of about 12% already. That's a pretty big drop in just about 10 hours or so. So BSV short is on my mind right now, just to give you guys a quick update on what's on my mind and the positions that I am taking. So let's talk about Elliott wave theory. This is going to be an Elliott wave technical analysis in somewhat decent detail. Okay, so for those that are new to my channel, welcome and thank you very much for joining me. And for those that are still interested in my course, make sure you guys check it out, okay? Check it out. It's the first tweet right here, or if you scroll down, look for this one right here. You guys can get it on Udemy if you want. It teaches you my specific style of trading from the very, very basics. And this is only going on till, guys, the end of the month, just till July, okay? That's it. And I'm gonna, normally they're about $420 for all 3 courses. And it's theory, and then it puts into practice. So if you're a new trader and you're interested in it, yeah, it's definitely for you. But right now, I'm just doing all 3 courses for basically $240 in crypto. That's basically 1 hour of one-on-one consultation. You're gonna get 40 hours of video, not bad. Anyways, I don't need to show my course, guys. It shows itself from all the videos that I've made and the track record that I have under my belt and the transparency that I have for you guys as well. So Elliott wave, an introduction to it. Elliott wave states that there are fractals that are broken down in every single move up and move down that can be deduced. And it can be broken down with many different alternate counts, but there's only one right one. But the thing is, you never know which one is the right one. And then we have alternate accounts because some of them might sound good, but other of them might sound better. So generally speaking, they ebb and they flow according to the Fibonacci sequence of numbers, okay? I like to count 5 waves upwards, and then this is more of an advanced concept, just in case I'm losing some people. 1, 2, 3, 4, 5 going upwards, and then there's a correction coming downwards, okay? And then after that, we attempt to make an impulse wave going to the upside. 1, 2, 3, 4, and 5, and it goes something like that, okay? It goes something like that, okay? And I'm just gonna keep going, right? And you never know, this one could make an A, B, C, D, E type correction, right? You could make a bullish flag, A, B, C, D, and E. Okay, and then finally we get the one last impulse wave going upwards, okay? And the final impulse wave going upwards could be something like 1, 2, 3, 4, 5, okay? Now it states this. It states that wave 3 is often the longest and never the shortest, okay? That's basically what it's saying. It's just saying that it can never be the shortest wave, wave 3. So all said and done, when you look at here, this actually ends up making 5 waves, right? 1, 2, 3, 4, and 5, right? If you think of it like that, this definitely does make 5 waves, okay? And then once we get these 5 waves going upwards, that whole structure actually ends up making one gigantic wave like that. So we can call this one a big one up there, right? But have you noticed that there would be 5, 1, 2, 3, 4, 5 in that one as well? So if you think of this one as the big one structure, well then within this small subwave of 1, there's also 5 of these types of structures as well. Okay? So after that happens, where we get wave 1, right? 2, 3, 4, and 5. Sometimes what we end up getting is something called a wave failure. And a wave failure is where the next wave going to the upside doesn't actually impulsively move up like how it should. So it ends up making something like that, right? And it ends up becoming a super small wave, actually barely a small wave. And then we call this a wave failure when we get 100% or more retracement, okay? So this is where it originally began, and if it were to have ended somewhere up there, then we would have taken the Fibonacci retracement range somewhere up there, perhaps, right? And it would have finished, say, I don't know, something like that. But if it falls below this 100% retracement line, that is what we call a wave failure, okay? And then we ended up getting an extended correction instead. Now, what we call this right here is we actually call this WXY, okay? We call this W, X, and Y. And the reason why we call it W is where the new impulse wave began, okay? This is where the new impulse wave began, and X marks the spot that it failed, right? And the Y is the new ABC that ends up happening, okay? So once again, the W to the X right here is where the impulse wave attempted, right? And then the X marks where it failed. And then the X to the Y is the second additional zigzag correction that it is making, okay? So I just want to get some of the theory out of the way. So in my opinion, okay, in my opinion, this is basically what's going on right now, okay? Let me show you guys this. So I've got two theories that are going on, okay? Simple. There's one theory right here, okay? On this one simple theory, we have already hit the 382 Fibonacci extension. Beautiful. And we actually are retracing above it, so that would be considered bullish, okay? Right? That's one way to look at it. And I don't want to do a detailed count right now. There's simply just not enough time. It would take over a 2-hour analysis. So that's one possible count. Now, the next possible count is simple. That failed, okay? And there's a correction that's still actually happening, okay? No joke. Okay, I'm going to draw this parallel channel for you guys really quickly. It's really not that coincidental, guys, that it's looking like this so far, okay? So, let me spell it out for you guys. If this were A, B, and C, now I'm gonna show you guys my opinion of if that were an ABC. If that were an ABC, then what this means is that this 1, 2, whatever that is, 3, 4, and 5, that's actually a really decent impulse wave going to the upside, okay? We hit 1618 on the nose pretty much and then broke through it just by little. So if this were the actual case, well, we're still looking for maybe an ABC, right? So right now we're range bound in here. In my opinion, we're range bound right in here right now. Okay? Between 10,275 or whatever, wherever exchange you guys are on, to about 11,000, okay? So one of two things is going to happen. If that were the original ABC, then this is the impulse wave going upwards, right? Is this going to happen? Right? Or are we going to get like a really deep retracement right now? So right now, we're already at the 382, like literally on the nose, okay? So if we get another retracement, like 10,000 is going to be a ridiculously strong support. Let me illustrate why it's going to be such a strong support, okay? Check this out, okay? So if you look at this region right here, between 9,750 to about 10,200, these are massive resistance zones. And we actually broke out of it, right? If you look on a closer, on the 1 hour right here, okay, we were trending in this particular zone for about 18 hours, trying to break above it. Because see this zone right here, I'm gonna make it red to make it very obvious, okay? You see this red zone? That acted as a support once it got here. Bam! It was like a springboard. It got here the second time, bam, it got back up here. The third time, it didn't hold at all. But when we tried to break out of there, it took us 18 hours for us to break above it. And we finally did, and guess what? We came back to the downside. This was previously resistance. It then acted as a support once, a support almost twice over there, right? So if there's an ABC, I really doubt that we're going to break below $10,000, okay? So that's one point to make if you were to write one thing on a piece of paper. I do not think that $10,000 will break. Don't take this as financial advice. Just see this as my own personal opinion, right? That's all that I'm trying to give you guys. If that were the ABC, for all I know, ABC could happen already, right? ABC could be happening already. So as it gets closer to this zone over here, I would be more interested in going long. And if I do go long on it, on the breakout above there, this right here would be my long position. I buy it on the breakout above $11,000 roughly, right? 11,000 is fair, right? And I probably end up targeting, honestly, 12K. Why do I say 12K? Because I think it's going to be really long and drawn out. It's not going to hit 12K until like way down over here, roughly, okay? And then my stop loss will be very small. I'll allocate an R unit of 2%, and I will gladly shoot for this 4.31 RR, okay? If we break above here, right? If we break above $11,000 roughly, oh, that piece of wood. I'll show you guys behind me. I have a fire going on right now, and the piece of wood just like almost fell off, and that was actually kind of scary because I don't have the gate closed, and there's a pile of like newspapers on the ground over there. Anyways, that's a 4.31 RR. Okay, that's a 2% gain to about 9% or 9% gain to a 2% loss. Right? That's one possible scenario. This is the bull scenario, right? Buying the breakout right here. I'm actually gonna tweet it right now just to show you guys. All right. So just to make it really clear, if we break above this right here, 11,100-ish, right? I'm gonna go long on it. It makes a lot of sense. Okay, I'm gonna go long on it from 11,100 and up, and I'm gonna target 12,000 roughly. Okay, and I'm gonna get myself like an amazing RR. Actually, you know what? Sorry, I didn't mean an RR 4.31. So once again, if it breaks 11,100, I'll long it to 12,000 with an RR of 2.72 to 1, which is actually pretty decent. If that doesn't break, then my next point of interest is between 9.7K and $10,150. That seems to make sense to me as well, because I'm choosing between this low right there and just between roughly these regions and where 0.4 is as well, okay? So now that's the hypothesis, or assuming that we are in an ABC, right? And you know what? Even if we are in a W, X, and a Y, right? If we are in a W, X, and a Y, I cannot break this down for the life of me. 1, 2, 3, 4, 5. Then that means that if this were the X, and this is an A, and that's a B, well, there's going to be a major C correction to the downside. That's really going to test $9,000, okay? So I just want to give you guys a quick and basic, but fairly detailed Elliott wave analysis on that. So let's take a look at the 3-day chart. 3-day chart, nasty, guys. Nasty. Histogram has and MACD have all gone to the negative side and crossed over. The only thing that's nice about it is it did bounce with a lot of conviction in the past 3 days on the 21 moving average with a huge bullishly engulfing candle. That's pretty good. Tweezer pair kind of combo. Almost hitting the 55 moving average on the 2-day, but not quite. On the daily, this is where it's the most interesting, okay? The most interesting thing about this is we closed successfully below it, and the whole time, right up until 6 o'clock, okay? Let me show you guys. What day was that again? That was on the July 18. It started July 18, okay? So check this out. Right around here. Started July the 18th. And then we ended up getting a really bullish run. Hold on. Am I thinking of something else? Oh no, that's right. My mistake there. I thought it was pushed up at the very last minute there, but it wasn't. So notice that like for the past the daily here, we closed well below it, and I thought that for this day we were gonna close successfully 2 days in a row before it, and that scared me. But of course the bulls ended up rallying huge from 9,200 all the way up to $10,000. In fact, for those that have missed it, that one massive bull run where it just literally just skyrocketed, it was this guy right here, right? It was literally this guy here from 9,200 all the way up to like 10,700, and then it ended up dropping after that from 10,700 all the way to 10,100, and that was pretty scary. But on the daily, guys, we are not gaining any steam, I have to admit. So think of two curvatures like this. One is like this, one is like that, okay? And then there's this one, there's another type of curvature like that, okay? One's convex, one's concave, one's parabolic. This one here fits more like something that could look like that, right? It's hard to disagree with that right now. So we're not really gaining any steam unless we gain huge ground today. On the 12-hour, yeah, we're crossing over, but look how tiny this is, the histogram peaks. They're tiny. They look like they just want to do that. And what this looks like it wants to do, the red one, is it wants to come down and then go up like that. And let me show you guys the significance of this, okay? I just drew in the red here, and now I'm going to draw in the blue. Then the blue ends up coming back down, and then we end up getting a crossover like that. So this little histogram peak could be very indicative of that. So that's what it could possibly look like. So we wrap around once, right? And then the red one fakes to the upside, but it comes down a little bit, and then goes up. And then the shorter one ends up crossing upwards for a fake out, crosses the red, recrosses it back to the downside, and then crosses it back up. That's a classical formula for MACD, right? When it crosses over to the downside. Let me give you guys an example, okay? Goes to the upside, crosses down once, crosses back up, and then bam, crosses again. So just to give you an example, right? For a bull run. So right here, if you look at it, okay? Let me make this a little bit bigger for you guys. So goes upwards, and then crosses down, and then fake out, and then bam, crosses out, and then finally the last crossover, the third one. Here's the first, here's the second, here's the third crossover, and then the third one finally starts to downtrend, right? Downtrended from like 10,000 to 7,500. So we have the same formula right here. But that was going to the upside, right? Where it's faking out to the upside. But now we're faking out to the downside, in my opinion. And I don't think that we're going to end up hitting above 11,100. I'm sorry, guys. But I think that we're going to end up retesting on the lower side. And I'm sorry to give you a bearish opinion right now, but that's just my opinion. And on the 6-hour chart right now, like, you know, it's coming down. It looks like there's going to be one more fake out, like I was talking about, where this one's going to come down. And then this one is going to end up coming down to like that, and then fake out for the triple crossover. Okay? So, and you look at the 4-hour, for example, right now, right? We're actually crossing over. Crossing over to the negative side. We're no longer on the positive side. We tried to get up, right, on the 4-hour chart to get some sort of, you know, keeping the 200 moving average below the 55 moving average, so we retain that golden crossover type of momentum with the fanning out strategy. But instead, we end up getting rejected, and we go right back down to the negative side. Not only that, this could, in the next 8 hours, look like it could be a death cross, actually. Maybe even 2 hours. If we drop down a little bit lower to like 11,000 or 10,100, there could possibly be a death cross. So I just want to give you guys my opinion on what is going on in the market in general, okay? And I want to let you guys know that my general bias, unfortunately, I still feel bearish, guys. Not feel bearish. I am bearish. And I am bearish for a very good reason. And that reason is because we have been getting many or in general X failures, right? And we're not getting smooth impulse waves going upwards. Not only that, we had one of the biggest bull runs that we've had for a very long time now, right? We're talking about the span of a bull run for about literally 193 days, guys. We've been in a bull run. 193 days. That's over 6 months of bull run. We're going to get some sort of correction. It's going to slow down a little bit compared to before, But nevertheless, I still think there's massive potential of profits to be made. And right now, guys, once again, the break point, just to summarize, is about $11,100 for me to long to $12,000, right? And then if that doesn't happen, my next point of interest will be between $9,750 and about $10,150. And that's going to be my point of interest to see if that particular region breaks. But as it stands right now, because we're getting rejected on the 4-hour chart right here, and we're still maintaining a very bearish stance in general. Let me show you guys the weekly, okay? The weekly doesn't look that great right now still, guys, okay? RSI is not really picking up or anything like that. It's just because we're getting a doji candle. Is it at the top of a bull run or is it the bottom of a downtrend? It's a very indecisive candle in my opinion as well. But I have been talking about getting a correction now in July for a while. And I'm not really surprised. Like I always say, what goes parabolically upwards will also parabolically correct downwards as well. And as you can see for the month, we're already getting this ugly doji candle that, you know, could be a bearishly spinning top or something like that as well. So that's my opinion for the day, guys. I'm bearish. I don't think we're going to break $11,100. I think we're more so going to get a correction to the $10,000 side again, and we're going to retest that for the next 2 or 3 days. So thank you very much for tuning in to the video, guys, and for watching this video. And remember, if you guys are still interested in getting the courses, you can check out my Twitter. Okay, just go to my Twitter. You guys can get it from Udemy if you want, right? It's on the first right here. They go for about $420 for all of them. But I've still got that little special going on where it's going out for $240 for all 40 hours of the 3 courses. It's not bad in my opinion. So have yourselves a great day and thank you very much for tuning in. Bye now.